IR35 is a set of anti-avoidance rules that were introduced from the 6th of April 2000 to tackle disguised employment. There was a perceived loss of tax and NIC to the Exchequer whereby an individual provides their services to a client through their own personal service company referred to as a PSC. The name is taken from the HMRC press release that announced the legislation. The rules apply, but for the existence of a PSC, the worker would be an employee of the end client. Thereby, we're looking through the PSC. Therefore, it's necessary for the contractor to determine their employment status by virtue of referring to a number of employment status tests that have been laid down by the courts in employment and tax cases and applying those to their contractual and working arrangements. IR35 therefore is not black and white, and it can be subjective. Note that the legislation applies not only to PSCs but also partnerships and limited liability partnerships, but enquiries into the partnerships and limited liability partnerships are rare. Where IR35 applies, then the worker's income is treated as employment income and their PSC is liable for the pay-as-you-earn tax and national insurance contributions. IR35 has been more of a deterrent than a revenue raiser, as HMRC's track record in policing the legislation has been poor. As such, reforms introduced the off-payroll rules for the public sector as from the 6th of April 2017. And this shifted the responsibility for determining the status of the worker from the contractor themselves to the public sector body. Where the worker is deemed a disguised employee, then that worker is placed on the payroll and their income is subjected to pay-as-you-earn and NIC. It was only a matter of time before the off-payroll rules were then extended to the private sector, and this happened on the 6th of April 2021 following 2 delays. This only affects medium to large size businesses. The introduction of the off-payroll rules has not only increased revenue take, but it has also made life easier for HMRC to police the IR35 legislation. Whether it's a one-person limited company or a public sector or private sector body, and IR35 has to be considered, then there's an obligation to consider the status of the worker and be able to properly demonstrate that to HMRC should they require to see that evidence.